on the NewsChannel 5 network. This is OpenLine.
Hello, everyone. Welcome to OpenLine. Glad you are with us tonight. It's Wednesday, April 8th. We are doing yet another live show in the midst of this new reality that we live in. The economy has not just slowed, it's almost stopped. And so tonight we're going to be talking about that impact. And one of the major impacts with the almost stopped economy is people and their mortgages. How are people paying their mortgages, and what sort of relief is out there if you believe you're going to have trouble paying your mortgage, or you know you're going to have trouble paying your mortgage? There is some relief. Congress has taken some action. So we're going to talk about that. Happy to have with us Brad Denton. He's the branch manager at PrimeLending. Again, joining us via Zoom. That's our new standard now. Brad, thank you for being with us.
Ben, thank you for having me. I look forward to helping.
All right, yes. So we encourage people to call in. They have their questions, comments, whatever. And I know this is a tough time for a lot of people with mortgages. What are you seeing, Brad, right now? Are there a lot of people that are concerned about not being able to pay their mortgage? Just kind of what are you seeing?
So, Ben, thank you. That's a great question. What I'm seeing is kind of a twofold question. A question for what's going on to mortgages while people have their mortgage in process and how that affects them. And the second part is how the CARE Act is affecting people and their options with forbearance and deferring payments in the future to give them some relief on the current financial situation.
Yeah, right. Well, the CARE Act, that is the thing that's been passed by Congress. So what are you seeing right now in your office? Are you seeing people that are concerned about not being able to pay their mortgage? What are you seeing come through there?
100%, Ben. That's a great question. So the CARE Act has been designed to a couple of things. A, it's allowed people to forbearance. The initial act allowed for 180 days forbearance. What I'm seeing and a norm is 90 days. Every service provider, and that's who you make your payments to, you need to call and have an open and honest conversation with them, because each service provider will have a different interpretation of the CARE Act. Currently, what I'm seeing across the board is 90-day of forbearance. And what forbearance means is deferment, not forgiveness. So what that means is you're going to have an option of foregoing your payment for 90 days, and in some point in the future, that payment will come due, eligible. But what it will do, it will help you with some relief right now if you're either unemployed, doing limited shifts, or making less money than you were a couple of weeks or 30 days ago.
So the CARES Act is what was passed by Congress. It is now law. And as I understand it, that impacts federal loans that I guess that are backed by the federal government. What if your mortgage is through a private lender? Does the CARE Act impact private lenders?
Ben, that's a great question. And when it comes to private lenders, I would highly recommend that you contact the private lender, and then whatever you work out with that private lender, get in writing. So the honest answer is private lenders are not covered under the CARE Act. They are allowed to come up with their own plan. I will be transparent with you, is that most lenders right now do not want to put people on the street. They're going to be working with individual borrowers to come out to the best plan. But the CARE Act, as I can remind everybody, covers all government-funded loans. So that would be all agencies such as Fannie Mae, Freddie Mac, FHA, VA, and USDA. So if you ask, I'm not sure what type of loan I have, please refer to your closing documentation, and that will help you. If you're also unsure, reach out to your service provider, either through the 800 number provided or the email contact that would be on your monthly mortgage statement.
So let's start first with private banks. And I know there's no set sort of template for this, but let's say I have a loan through a private bank and I want to get a grace period, get forbearance, as you put it, which just means it's not forgiven, but it's basically delayed. What will they ask of me? How do I go about doing this, and what will be asked of me?
Again, that's a great question. So let's say there's a couple of different options available. most service providers, and I hate to use this word, but it's called qualified, you will have to qualify for forbearance. So you may have to provide some documentation of your job loss or your furlough or your laying off in order to qualify it. When it comes to private lenders, again, because they may have their own unique guidelines to your specific case, I would recommend to everybody, if you have a private mortgage and you know that, to contact the private service provider, that is who the person you make your payments to, and have that conversation to is what plans do they have and refer to the CARE Act, or what plans do they have to help give you some forbearance relief on your current situation as it relates to your individual situation.
Now, I'm reading this that says the CARE Act does not require homeowners to submit any documentation to get forbearance. They do need to attest to financial hardship caused by the COVID-19 emergency. So that was my next question. If you say that, okay, I've had financial hardship, please just give me forbearance. Please give me 3 months or 6 months delay on paying my mortgage. Do they have to do it? I mean, will they automatically just do it?
So let me say this to you. I'm a firm believer is you need to have an open dialogue with your service provider. The answer is, Ben, there are a lot of different service providers who are following different plays, different plans. We at PrimeLending, we would have an 800 number that you can contact, or you can contact through email to talk to a service specialist about your particular situation. But I've also heard of other service providers that you may call in and they have an automated system that you just sign up for it and it's automated. So the bottom line, it comes down to the interpretation of the CARE Act to that individual service provider and your situation. So I think it's not wise of me to make a blanket statement saying that everyone qualifies for it, but I would again encourage the listeners and the borrowers to contact your service provider, have the conversation, and if there is a qualification period or qualification documentation that you need to work with them, they'll tell you specifically what is needed in order to qualify for the CARE Act.
And let's say I go forward with this and I get forbearance. Is there any sort of penalty? Is there any drawback to not paying your mortgage through this system for 3 months or 6 months? Is there interest that's accrued? Is there a penalty? What happens if I actually get this?
Great question, Ben. So under the CARE Acts, and again, this is very vague conversation, but this individual service provider will notify you of that. I am interpreting the guidelines from the CARE Act is you will be able to defer your payment up to 180 days. What I am seeing right now is 90 days. So for example, if your current payment is $1,000 and you forbearance for 3 months or 90 days, you're deferring that $3,000 that on the 4th month you would be required to pay the $4,000, which is the 3 months plus your current payment on the 4th month. If that is a hardship on you, I would again recommend having a conversation with your service provider so you know what their options are. I do not believe that you're allowed to collect interest on forbearance in the current CARE Act.
Wow, and I didn't realize that. So you think the full amount would be due at the end of this time. So that could be hard on people. And of course it varies from lender to lender, but that's something you really need to ask about. You need to ask, all right, I'm getting forbearance, but what happens on this 3rd month or this 6th month? Do I owe just my regular payment, or do I owe all of the money that I have not paid yet?
And Ben, you are 100% correct. And I would encourage people not only to have a conversation with the service provider, but get the statement that your customer service specialist or your loan specialist has to you in writing so that you have something that's going to protect you in the future. Again, no lender wants your house. They really don't. They want the payments on your house. But we are going to do our best to work with people. But every service lender has a different guideline, and it's important for you to be informed. And I'm going to say this to you, be patient. You have to realize there are thousands of people calling in or contacting service providers. And so you may get frustrated on your end, but keep in mind that person that's helping you is getting probably hundreds of calls a day, and they want to help you. Just be patient.
Let's say you can afford to pay it, but you see this opportunity out there. Well, if I just make this call and say financial hardship, and almost anybody could claim financial hardship legitimately as a result of what's going on, but they could pay it, but they say, I'm just going to take this opportunity to put my payment off for a few months. Is that a good idea?
Ben, in my professional opinion, no. If you can make your current payment, I would absolutely do it now, because again, let's go back to my earlier example of $1,000. It's much easier to make a $1,000 a month payment than it's going to be to make a $4,000 payment in 4 months. Although you may not have a payment currently, and if you can afford the payment, I would still say make the payment.
Make the payment. Have you ever seen anything like this? I mean, you're in this business, so I'm just interested. Have you ever seen the government come in and say, okay, mortgages, you don't have to pay them for 3 months or 6 months or whatever they're saying? Have you ever seen anything like this?
No, sir. Ben, honestly, even if you go back to the 2008, 2012 period when we were doing loan modifications and mortgage companies were working with individual borrowers to try to modify their loans to keep the loans from going into foreclosure, it wasn't a product of the income, it was a product of the devaluation of real estate. So the current situation we're in with COVID-19 is more about the inability to earn a living versus the ability to, the value of your property has diminished so much that you were really kind of upside down on your property.
Yeah, and do you think this is something needed? I mean, you're there on the front lines. I mean, do you think this is a good idea, the CARES Act and deferring mortgage payments? You know, what would happen if we didn't do that right now, in your opinion?
Again, you know, Ben, I've been in the mortgage community a long time. I've been very blessed to do that. I would always tell people, lenders do not want your home. They want your payment, and I'll tell you why. The foreclosure process, even though they may get the property, they have to pay so many other properties that is not an item where people make money off of it. It's really not. Foreclosure is just a way of trying to make the property whole. Absolutely, lenders are more interested in working with the individual borrowers to make the promise of trying to get the mortgage payment made and trying to keep the mortgage process moving forward. It is not in the best interest of the lenders to foreclose on properties. They would rather much work with the borrower. So the CARE Act is giving people the opportunity to have some stable housing and to work with the impact of people's individual employment, furlough, laying off situation, so they have some relief. So the last thing they have to worry about is where I'm going to lay my head at night. They can focus on getting through this, being safe and being healthy, and having an option down the road to continue to live in my home and take care of my family.
Now, I'm going to start taking calls here in a moment, but of all the things you've said, the things that concerns me the most, the thing that concerns me the most is, okay, so you get forbearance, and it says here, you know, they're not required to submit documentation to get forbearance. All they need to do is attest to financial hardship. Great, that's great. There'll be a lot of people calling in, so you need to be patient, as you said. But what you're saying, what I'm hearing you say is, okay, so I get this for 3 months, forbearance, which means my loan is basically just moved 3 months later. It will be due, I understood it to be 3 months later, or maybe that's not right. But what you're saying is in 3 months, so I don't have to pay. What is accurate is I don't have to pay for 3 months. But what you're saying is in 3 months, I will have to pay, I'll have a bill that will come due that is higher than my normal mortgage. It will be 3 times. It will be all 3 months will be due at one time. And I think for a lot of people, that's going to be really hard.
And you are correct, Ben, 100%. That is a large amount due, and that's why I encourage people, if you're able to make your payments, make your payments. Now, that being said, the CARE Act is stimulus package number 2. As I understand it, that there's a stimulus package number 3 in the works. So what we discuss now may be a whole different options available for you and to the buyers and the homeowners in the future.
Wow. Well, I mean, that would mean, I think part of what they're trying to do is stop what happened in 2008, right? Where tons of homes were, in fact, foreclosed on. But if all they're doing is punting the payment down 3 months or 6 months, we could have serious problems in that time. I guess it's almost like they're delaying the problem. And if you have a payment due April 1st, you're probably pretty happy to have that delay. But I would be worried if I took it April 1st that I wouldn't be able to pay in 3 months worth of a mortgage. But okay, all right, that's very interesting. Yeah, go ahead.
No, that's a great overview on your part. Again, by deferring the payment, you have to understand that the payment will come due at some point in the future. The guideline from the CARE Act is up to 180 days, but each individual service provider has to interpret it on what they are willing to do. So what I said is, based on me making some calls and checking on different service providers, the current situation for right now is 90 days. What I would say to people is, if you roll up on the 4th month and you are still having struggles to make that 4th payment, contact your service provider, talk to a loan specialist about what you can do, and work with, again, lenders do not want people's houses. They want your payment, and they are going to do everything they can to work with you to make sure you keep the roof over your home.
All right. Let's go to Carter here on line 1. Hello, Carter.
Hi. Good evening.
Go right ahead. What's on your mind?
I just want to basically chime in with what you guys have been talking about. This isn't rocket science. I mean, you don't have to pay your bill or your mortgage every month for 3 months, period. I mean, eventually you're going to owe your bill. So to expect someone to just you're never going to have to pay it, I mean, you're living in la-la land. You know what I mean?
Right.
In addition to that,
well, go ahead, yeah.
Of course the lenders want you to pay, because if the bank doesn't get their money, then we look at a bigger problem. So and the other bigger issue is, yeah, you don't pay your mortgage this month, but they're not paying their credit card debt either. It's a snowball effect. People have been living outside their means for a long, long time. It's all on paper, it's all on plastic, and cash will always be king. I'm going to leave you at that.
Okay. That's interesting. What do you think of that comment?
Ben, honestly, when it references to Carter's statements, I again agree. If you are able to make your payments, make your payments. She had a great point of saying is you are postponing the inevitable, where that payment may come due in the future and you may have no payment to be made. And I understand if the person is unemployed, but I hate to use this analogy. You're robbing Peter to pay Paul. At some point, that payment's going to come due. So the best way to handle that is address it immediately and determine the best course of action for your particular situation.
And I'll be honest, when I heard this, I thought it meant we just take a pause. And, okay, there's a 3-month pause. You have a 30-year loan. And instead of being due in 30 years, it'll be due in 30 years and 3 months. In other words, it just pushes the due date of the loan back 3 months. But you're saying that's not necessarily the way it works.
Yes, Ben, you are correct. And unfortunately, the ripple effect of the mortgage industry and the investors who actually buy the treasuries that are secured by Fannie Mae and Freddie Mac, and whether it's GMA, which stands for Federal Housing Administration, and USDA loans, if we suddenly turned off the funnel of the payments being made, the investors that are guaranteed a return on those investments, they would no longer buy them, and the rates would actually push up dramatically, because there will be no appetite for investors to buy mortgage-backed securities.
Wow. All right, well, this is very interesting. So I've learned a lot already just in this first segment. So we're going to take a break. If you're on the line, Frank and others, hold on. There's the number, 615-737-PLUS, 615-737-7587. If you want to call in, plenty of questions about your mortgage and about other people's mortgage. What's going to happen? Take a break. Be back right after this.